Real Talk, where we put the real in real estate. And we're talking to two big real stars in the leasing and property management industry. We've got Danny Hardeman with Blue Crown Properties and Amy Hanson with A Plus Property Management. Welcome, guys.
Howdy, howdy. How are you?
We're doing great tonight. And so we're amongst some royalty here, both locally, state, and nationally. So, Danny, you are a past president of the National Association of Property Managers for Dallas chapter. Is that correct?
That's it. Yes.
And
Correct.
you currently serve on the Metrotex board, so you are very involved, sir, pounding the pavement and at the state level as well. So we appreciate everything that you're doing there. And then, of course, we have Amy Hanson, who is, what is your current role, Amy?
My current role is president-elect for the National Association of Residential Property Managers.
Wow, Amy, overachiever right there, right?
That's an understatement, Ashley.
Yes, absolutely. But that's why we have both of you here today, because you are amazing pioneers. And not just pioneers in the industry, but you're advocates for mentorship and training. And I think that's what the amazing part here. We're not here to just completely scare everybody off of doing leasing and property management, but there's a lot of things that are not only our consumers, but our realtors that are getting into this type of space really need to hear. And so we find it prudent to talk about it in a way of, hey, you want to learn more? There's ample opportunity. I know Amy and Danny are also amazing instructors. And so we'll kind of touch on some of the classes as we go on. But ultimately, you know, we scare little people off to this evening, guys. Have you done your job? Maybe?
I always like to say these type of sessions are about shock and awe, right? We're about to scare you. Either at least you're going to go into it eyes wide open, or you're going to run away as fast as you can. So one way or the other, come on in. The water's warm. Yeah.
Okay. And then, of course, we've got Reese Gentry, who's on there saying the goats. I think he might be sucking up just a little bit, but I would agree with that. And then my child, who has now gotten to the age where she is tuning in. So, hi, sweetie. Be nice. Anyways, well, let's dive right in. So I think the biggest thing is why we're talking about this is the ever-growing landscape and the bigger market share that we are seeing in leasing and then subsequently property management. So, Amy, you were great to share some stats with me earlier today. So overall in the U.S., 44 million American households are actually renters. And millennials comprise the largest share of that with 42%. Man, that is staggering.
Yeah. Which is great for us. Those of us who work in property management, we love the fact that there are plenty of renters out there that want to rent our properties. So we work with a lot of investors. We work with a lot of renters. So for us, it's great news.
Right. And I think that's just, it's also seeing that the affordability crisis, the cost of acquisition, all of these things are obviously stopping, of course, the largest buyer pool, which is the millennial population. It's harder and harder to kind of get into that barrier of entry of homeownership. So, you know, let's go into also, there's some people that just do it because they choose to, which is mind-boggling to me. But some of the reasons, Amy, that you shared again was 74% said they couldn't afford to buy a home right now. You guys also work with people that are acquiring properties. Are you seeing that even on the investor landscape?
Yeah, the prices have continued to go up, especially here in the DFW Metroplex. I mean, the prices have just gone up and up and up and have priced a lot of investors out of the market completely.
Yep. What about you, Danny?
I would say the same, but you know, the challenge is, you know, we had such a drastic run up, you know, over the last few years. And now that money is expensive again, which is not really, it's more normal over the course of history.
Sure.
You know, these deals are just not penciling out for investors anymore. So,
sure.
you know, kind of the counter of what Amy said is, you know, what we've seen in our office is a decrease in the number of investors approaching us and an increase in the number of owners wanting to hold on to that asset and now become a landlord, because you are not going to pry them off of that sub 3% loan. They'll never see that again. Right. Yeah. So it's a very interesting time in the market.
Well, and I think that also shows that why having this conversation is equally prudent, because we have a lot of realtors that are going to be approached by the clients that bought the home with them, and to say, hey, Jennifer, I'm just throwing a name out there. I don't know Jennifers that are doing this. But hey, Jennifer, we really like to buy another house, but we want to rent ours out as well. Can you help us with both? And I think that's a topic that we're seeing right now. So I think we'll go back into that here in just a minute and talk about those pitfalls and what we need to really urge primarily residential agents that are doing resales and things of that nature, kind of away from. But the other part of why people choose to rent, 42% said they like the flexibility of renting. So that's really interesting. What are you guys seeing with your tenant pool? The demographics that are currently renting some of your properties, are you seeing that there are a lot of people that actually have really good credit scores, really good income, and they just like the idea to be able to not be cemented in and pick up and move if they want to?
I would say yes to that. And I'll also give you a little thing I picked up online a few weeks ago. And maybe this is a saying, but it was new to me. So maybe it's new to you. A wise man once said, when you rent, that is the most you will pay per month.
Yep.
Right? When you own, your mortgage payment is the least amount you will pay per month. And that really resonated with me, right?
Sure.
And so I think you're seeing a lot of people that are, and especially the millennials and the generations below that, are already starting to think, well, maybe, the dream of home ownership is not all it's cracked up to be. And, maybe we will see a mind shift change, with that generation. I mean, I think we're already seeing some signs of it. But yeah, I totally agree with you. But that saying really resonated with me, that just some people just don't want to ever buy, and that's fine. Invest your money.
That sounds very Dave Ramsey of them to say that quote. So I won't pick on him too much, but it's like you teed me up for the next stat, which is 36% said they'd prefer to avoid home maintenance and other extra costs. So that's kind of something. Amy, what are some of the things that, as far as extra costs, beyond just the traditional home maintenance, that your owners are seeing right now that maybe is kind of throwing them for a loop? Because it's not just the AC servicing or something breaking or anything else. What are we also seeing an increase of from the investor side?
A substantial increase in property tax.
Bingo.
It's been huge in our area. And also the insurance rates. We've seen so many renewals that have been coming in at double the cost they were last year. We've actually had some insurance companies that said they are no longer going to be writing investment property insurance. And so these investors are forced to go out and find new insurance.
To piggyback off that, Amy, I had a discussion today with a roofer and maybe you guys are seeing this yourself. Some insurance companies are requiring 2% deductibles now instead of
that's
1%.
everyone. Oh yeah. No, that's 1%.
Well, I guess I'm late to the game here, because I was just looking through my renewals and I said, wait, these are all 2% deductibles now, So it's an interesting, step that insurance is taking to further protect themselves.
Yeah. Well, so, what's interesting on that. So, my hubby, who you both know, that does the property management side of our business, we just had a 2-year-old duplex where the washer is upstairs, and we install washer and dryers and refrigerators in all of our units. So this kind of stuff doesn't happen, but it still can. And the hose disconnected and flooded the, whole second floor down to the first floor. And my first thing was, let's double check how much it's going to cost to fix it. Do not make an insurance claim. And that's really horrible, that when you have something like that, a catastrophic incident, and my first response is halt.
Yes.
Do not call the insurance until we can figure out what this is going to cost. And ultimately, it was 3 times what the deductible was. And so the owner basically said, it's still worth it to me. But that is the landscape where you have to quantify whether or not do I make the claim, or do I suck it up and do I just do a cash pay on what it's going to cost. So
and on that note, Ashley, people are having that same conversation even on roofs now. With these 2% deductibles, is it worth filing on or not?
Well,
Absolutely.
and I think there's something to be said about that, and we can go more on an insurance tangent all day long. But I think what people aren't understanding is insurance companies are looking at an aggregated risk pool. And it's in one, they're spreading the love. So even if you don't make a claim, and I've seen insurance people and other people still say, hey, even if you don't make a claim, you're still going to have an increased premium. So still use your policy. The flip of that is then you go into an increased risk pool on top of that, because you make multiple claims, then that means you're more likely to make additional claims in the future. And so it's not to say don't use your insurance, but at the same time, if it's a fix and you can afford to do the cash pay and do that, I would still tell people to have that conversation. All right, Wesley, I would say make sure you have an annual review of your policies with your insurance agent. If your agent doesn't do those, he is doing a disservice. Wesley, I would agree with you, sir. And we are seeing a lot more consultative work happening, both obviously that was already in the mortgage space, but really in that insurance space. And I think that's why we've all had, great relationships with trusted affiliate partners. And guys, that's something that you should continue to do. So let's move on to the next one. We can always come back to insurance, but 29% said buying a home is financially risky. I thought that was a really interesting one. So we're in DFW, so it's a little different here. But what would you guys say to nearly 30% of potential buyers saying, nah, I want to stay on the sidelines because it's too high risk?
Well, I would say I think a lot of people are just scared. They don't know what's going to happen with the mortgage market. Yeah. We are in a uncertain political climate, having just come off of Super Tuesday. We've got we talked about interest rates, sales prices. People said, oh, we're going to hit a recession and don't buy now because the prices are going to bottom out and you're going to be buying at the top of the market. And I think people are just really, really scared. They don't know what to do. So it's easier to say, hey, you know what? I'm just going to take a step back and I'm going to rent for a while. I know we ended up with a lot of renters that were previous homeowners because they tried to sell at the top of the market and go into the renter pool and have stayed in the renter pool because they're too scared to get out of it at this point in time.
Yeah. No, and to Danny's point, at least it's a known evil. Right? You know what you're paying and everything else. And so I can't fault them. But at the same time, we also know that we are in an appreciative marketplace. And so it's still a great time to buy, no matter if you are an investor or somebody looking for their primary residence. So let's go with all that, because we have so many people that are looking to rent and or, as you said, Danny, primary resident owners that are saying, hey, I want to scale up, but I want to keep my sweet 2 3/4% interest rate because that's a gold mine. We're seeing more and more agents dabbling in leases and even some in property management. And that's something that is quite unnerving for all of us to consider, especially the two of you who have been in this business for decades and understand the pitfalls. You've been, probably dealing with people in litigation. You deal with people in eviction court. You deal with all of these different things, on a consistent basis, because there are a lot of policies, procedures, municipal restrictions, and all of these things. And you guys are at the forefront of educating yourselves. But let's talk about what agents should do right now, because it's okay. It's okay if they want to diversify their business strategy. And that's why you guys teach these classes, to make sure that people are educated that do want to learn, just like my husband, right? I mean, that was it. Let's sit there and feed off the water hose, because it's something that we wanted to do, but ultimately you have to educate yourself. So one thing I know, Danny, you're big on, what's a violation of our code of ethics?
Competency, and that's one of the things that is near and dear to my heart is, don't do something that you're not competent in. And, we get this all the time, and I'm sure Amy will concur with this. It's just a lease. I mean, come on, what can go wrong? And the answer to that is everything can go wrong. I think you're more exposed from a liability perspective going through a lease process than you are a sales process, because there's so many different ways that you can be exposed from a liability perspective. And I'm not just talking about fair housing, but that's a huge part of it, right?
Sure.
So if you're not competent in doing leasing, you're really opening yourself up to a lot of liability exposure. And I truly think that you're doing a huge disservice to your client as well. I can't even tell you the number of leases that we've taken over as property managers, and I'm sure Amy's going to smile and agree to this, where we take over a tenant and first thing we do is we're looking at the lease that was signed and how horribly put together that lease was, where it didn't protect the landlord in any way, shape, or form. So if you're not competent in this and you're an agent out there contemplating doing leasing, take some classes first, or strategically align yourself with someone you can send those referrals to, where you can still make some income, but you're not opening yourself up to liability.
So can we talk about some pitfalls? Amy, what are some things that you've seen in leases that maybe you've inherited from a traditional, residential agent that doesn't deal with this on a normal basis?
The things that I see most common are a lack of protection for the owner where it comes to late fees. So there are either no late fees in the contract, or there's no penalty for paying late. So there's no incentive for that tenant to pay on time. The other thing that I commonly see is no lease termination policy. So when something goes wrong, somebody has to take another job outside of the area, or they have a financial hardship and they need to break that lease. There are no provisions within that lease contract to make sure that both sides are taken care of. So those are the two big ones that I see. And Danny's right. I see a lot of agents doing leasing because they say, oh, it's just a lease. And I just cringe whenever I hear that, because I'm thinking it's not just a lease. It is a legally binding contract between these parties that you're getting involved with. But one of the biggest things that I see is that agents are doing this, even if they're just procuring a lease and not doing property management, without their broker's knowledge. And that is so unbelievably dangerous. The broker, we all know, is ultimately responsible. And the broker is supposed to be making sure that all of the agents have competency. But these agents that are doing leasing, a lot of them, the brokers don't know. And it's going to come back to bite them in a huge way.
And on that note, Amy, the broker may not have insurance for it. Right. So it can be a huge, huge mess for the broker.
We all know E&O insurance is something that's critical for our business. If you do not have E&O specific insurance for property management may not be covered. And if you're just doing leasing, you may not be covered at all. So E&O insurance companies don't really love property management because there's so much litigation involved and so many opportunities for errors. So a lot of these agents that are doing this without their broker's knowledge probably have zero E&O insurance to protect them.
Well, and in the landscape that we are in right now, with so many things under fire in our industry, insurance coverage is a very important topic. So even if you're a broker on this live stream today, I would say double check with your E&O provider and make sure that if you have agents that are just doing leasing, that you are covered. Now, would you say it's the same concern or liability if agents are helping potential renters procure an actual, rental property?
That's a great question. I don't know the answer to that. I mean, I've never looked at it from that perspective because that's really not a part of our business model, as tenant rep. Amy, you have any thoughts on that?
I don't know if there's any increased liability there for doing the tenant rep. We did find out a lot of the E&O insurance companies, even if they're allowing you to do property management, if you have your own properties that you own, they may specifically be excluded from that E&O insurance policy. So it gets really complicated when it comes to E&O insurance and property management. So definitely something people need to dig into before they take the leap into going into leasing. The other big thing I see that is a problem with agents and when they're trying to help their clients, and I think it's an honest mistake, like you said, Ashley, they call up and they say, hey, you helped me buy this house a year ago, 2 years ago. I want to keep it. So can you just find a tenant? And the agent will say, yeah, I can do the leasing, but I can't do the management. And then they try to turn it over to a property manager after the process has already started. Then you've got too many hands in that cookie jar. It makes it really difficult to pass those contracts around. So like Danny said, it's best to, if you're not going to be fully competent in being able to do leasing and or property management, find a referral partner that can help you out, that you can work with, that you can depend on to know what is supposed to be happening within leasing and property management. Yeah, Alicia, you're right.
There you go.
Your personal property. Yep.
But Amy, to add on to that, something that gosh, now I just lost my train of thought because I was reading Alicia's statement. It'll come back to me. Come back to me.
Don't do
Come
that.
back to
I
me.
sit there and say,
Oh
you
my
let
gosh.
me do the chat. You guys be the brain trust.
You guys only see our beautiful faces, but like all of your nuggets over here of information are flying by me. All right, come back to me.
That sounds good. So Sherry Godot had a really good question, and she said, "Have you seen an increase or decrease in evictions, or about the same?" And I would say, that's obviously a mixed bag. So let's talk about maybe the last couple of years. What's it looking like, Amy?
Well, I would say our evictions have gone up tremendously. For a number of years, of course, we were under the COVID protections and we were not allowed to evict. And so a lot of those COVID protections have expired. And the rental funds that were out there from either cities or municipalities, those funds have run out. And so there is not rental assistance out there anymore. And so people that could have, been able to rely on rental assistance and or have the rules and regulations prohibiting evictions, those are all gone. And so we're seeing an increase in evictions.
Danny, what about you?
Yeah, I mean, I would say yes. I think that we're still dealing with some challenges in the eviction courts, and Amy and I love to vent back and forth to each other, and this isn't the space for that, but let's just say Amy almost got thrown in jail for being so mad at a judge.
I love that story. I love it.
So the thing is it's still the Wild West out there. For those of you that don't understand how evictions work in Texas, these happen at the justice of the peace level, which is essentially the people's court. Your judge may or may not be an attorney, right? I mean, she could just be you and I, and so there is not consistency across the courts. So you really need to kind of educate yourself going into your evictions on, hey, am I going to win this or not? Right. And make sure you did everything right, because there's still a few things that can really torpedo your whole case, such as the CARES Act still requiring, a 30-day notice in certain situations, if there's a federally backed mortgage or if it's a Section 8 tenant or somewhere where you're getting government assistance. I think the average realtor doesn't know that, and they're still thinking the 3-day is still in play. So I think the biggest challenge that we're still seeing when it comes to evictions is, yes, the increase in evictions, but also the sheer volume of tenant advocacy groups and these pro bono attorneys that are just sitting outside the courtrooms. And so, tenants will walk in with no representation. I'm not saying it's wrong for them to have representation, but it's almost like a used car salesman's hitting them up, as they're coming and leaving court. So they have instant representation, or they walk out and they say, hey, you need to appeal. Right. So now we extend this even further. So evictions are still a big challenge. And I think that you're still seeing higher evictions because of the fact that our rents have gone up so much, but wages haven't. Right. So the tenant that was able to pay 2 years ago may be having problems now.
Well, and that's to Alicia's point. Tenants are just walking away. And I think some are just having to make that, gut reaction at that point to say, you know what, I just have to move on. And I think that taking that back to why there's increased liability of somebody just dabbling in the leasing space or the property management space is understanding that there are two forms of that. You've got the tenant advocacy groups that are sitting there with a lot of knowledge base. They are combing through and understanding every inch of that property code better than anybody else. That is what they are living, eating, and breathing right now, like dragons. And so they're sitting there extremely proficient. And then we've got owners and layman agents, which again, it's not because they're malicious. It's just they're not sitting there and understanding the actual property code and then the updates to the property code. And there are so many pitfalls in there that they'll just find one little thing that the owner or the property manager isn't doing appropriately, and you're busted. So what are a couple little things, like some tidbits that we can share on the property code side that you guys hear from a horror story aspect that are getting people out of leases or out of the eviction process because an owner or property manager didn't make sure that property was in compliance?
I would say that the best way for you to always be taken care of in eviction court is to try to stay out of eviction court as much as possible. That's the best way to win. Anytime we have a situation with a tenant, and Danny jokes with me about the fact that we try not to ever go to eviction court. But once we find that a tenant is not paying, and if they can't pay, our number one goal is to get possession of that property. And so if we can do that without having to go through eviction court, we all kind of win in that situation. But
sure,
when we do have to go to eviction court, I always think it's fascinating to sit there and listen to the other court cases that are going on at the same time. And time after time, it appears to be that agents, property managers, and owners drop the ball when it comes to giving notice. So like Danny said, in some cases it's 3 days, in some cases it's 30 days. It depends on the court, it depends on the jurisdiction. But it also depends on how you deliver that notice and making sure that you are delivering it and that you can prove that you delivered it. So the property code is there for a reason, and it's to protect both parties and to make sure that we are delivering the notice as required. And because if you don't, your case is automatically thrown out and you got to start all over again.
Yeah.
Yeah, delivery is key. You know, that you will, that's how a lot of these tenant groups are winning in court, because of improper notice, you know. And you're talking about the layman agent, you know, they somewhat know the code, but they kind of don't. And I think that's really the problem, is if you don't know the process inside and out, do not even try to do it, because you're not doing what's in your client's best interest. Again, goes back to competence, right? Mm-hmm. And, you know, if you don't, just outsource it to an attorney. Mm-hmm. You don't want to lose in court simply because you screwed up the whole process by forgetting to wait, you know, a certain amount of time before you file, or you put the property manager as, you know, the plaintiff instead of, you know, the party, which is the owner, which I still can't believe people do that, but they do, which is unbelievable to me. So those are some of the main issues that you're going to face is delivery in the process. But to Amy's point, I really agree with her that, you know, once they start having a problem paying, it's really in your best interest to figure out an exit that doesn't involve eviction court, because what you need to always assume in today's you know, current plate where we are in today's world with these advocacy groups and whatnot, these tenants are being told appeal. Right. So we've seen this huge uptick in appeals, which just drags this process out even further and costs the client more money. So if you can get them to get out of there, do it. You know, you can always go back and, you know, get them out and then go file, you know, a judgment, get a judgment against them for the total amount owed versus getting an eviction judgment.
Yeah.
Well, and that's what I was about to say is, you know, so much of that is, one, we want to keep the client happy, right? Clients should be for lifetime. They shouldn't be for a transaction. And so if somebody calls you and says, hey, I want you to help me, of course you want to try to help. And I think people do it from the right position. But here's the thing. If you sit there and it takes somebody 6 months to get somebody out that is a non-paying tenant out of that property, most people do not have that type of savings to subsidize the mortgage and the utilities and everything else for 6 months at a time. And that's the other thing is, are you willing to lose a client for a lifetime because you wanted to help them in that small instance to make a little bit of money, instead of sitting out there and finding one of your trusted partners that will turn around and refer them back to you when they actually want to sell or do something else and take care of them. That's our goal, is to always make sure that our clients are well protected and well taken care of. And I know both of you have that business model in which you have these cooperative relationships with realtors out there, just like we have other trusted vendor and affiliate partners. Guys, find trusted people that you can reach out to in the property management side. I promise you will look at like a rock star when you have people like Danny and Amy that are helping them leverage their property as a rental property, and asset management and property management at the same time. So you can help them buy that next property and look like a rock star.
Hey,
So
Ashley, I'm
yeah.
sorry, just to follow up on that, I remembered what I was going to say a minute ago,
Okay,
because you
good.
just you just nailed it. You're talking about agents that are going into doing leasing. What I think needs to be done is, I think the agents need to do a much better job of educating themselves, first of all, on the pros and cons of leasing, because it may or may not be the right move for that person. Because they may not have the stomach for it. So agents need to become competent, in my opinion, is to be able to educate that client. Okay, yes, here's all the pros, but here's all the cons. And to what you just said, hey, let's do the worst case what ifs. What if this property sits vacant for X number of months? What if the tenant doesn't move out? What if they appeal? What if they file bankruptcy? Oh my gosh, all these things can happen. How long can you live without income, right? You may not be able to do it. So the pros and cons of leasing is one of the key takeaways the agents on this stream should remember from this session.
No, I love that. And Shanae is asking, I've been following the rent control ordinances and the laws that have been passed at both the state and city level in California. Do you think any of those type of measures will come to Texas anytime soon?
Well, I spend a lot of time at the national level watching what's happening across the states. And it is, it typically holds true. Whatever starts in California makes its way across the United States over to good old Texas. So yes, I think it will be coming down the pike at some point in the future. It's very interesting to watch how the rent control works. When they first started, they said you can't increase rent more than X dollars.
Right.
I understand that. Well, a lot of areas, and I know Minnesota recently changed their rules as well, to add that if you ask your tenant to move, you're also held by rent control, because they didn't want landlords to move tenants out just to be able to increase the rent. So your tenant has to want to move and be willing to move on their at their discretion, without the owner wanting them to move. So lots of rules and regulations. The government is really coming down on what we would consider to be rent control, rental increases. And we've had a lot of movement at the national level to try to eliminate the 30-day notice that was required as part of COVID and the CARES Act. There are some places that still require it, some that don't. So the national groups are trying to fix that. And now we've got the Renters Bill of Rights that's coming down the pike, and junk fees that's following right behind it. So there's so much that's happening in the legislative world that is going to impact all of us. So I think she's right. It may be coming our way.
Danny, what you say?
I mean, yes, I think to an extent. There is no hard data out there that proves that things like rent control are good solutions. In fact, there's a lot of data showing that they're not, right? We don't want to go, too far right, too far left with this discussion, because this can easily turn into a political discussion. We want to keep this real estate focused. I agree with Amy to a point that, what happens in California does maybe possibly happen some other places. I don't think it's going to in Texas anytime soon. I think some of the things that we may see soon, I don't think rent control will be something we see soon. But, things like Amy mentioned junk fees. And, there's a big frustration, not just in Texas, across the nation, with multiple application fees. The amount of money people have to put out there just to apply. At some point I could see something come into play where, one application is good wherever you apply for X number of days, right? And maybe it's some sort of universal application, and if that's I hope it's not at the federal level, maybe at the state level, right? Where we all use one application repository and that person can use that application. I think we might see something like that sooner than some of these drastic measures that places like California, Oregon, Washington have implemented.
Well, and I think to Alicia's point, it is hard to do rent control when taxes or insurance are going up. And I think those are the conversations, specifically in Texas, where we have no protection outside of the homestead. exemption on the rate of increase, in the assessment value, right? The taxable value, not the assessment value, the taxable value on properties. And that's something obviously that we're continuing to work on, but especially places like Texas, in Florida, and where insurance premiums are at an exponential high rate, you have to really look at that. And the one thing I'll say is that that's happening, and that's very humanizing across the board. So even our local elected officials are sitting there and having to have the burden of those increased costs. And so I know from, the local association side, specifically MetroTex, these are the conversations that we're having with our local constituents and our local elected officials to sit there and say, hey, I get it. It's not tenant good, landlord bad, or landlord good, tenant bad. We have to really look at this as an equitable, holistic situation. We have tenants that want good quality rental property that's affordable to them. And we saw in the trends, 36% said they preferred to avoid home maintenance and other costs. But at the same time, those costs are still being paid by somebody else. Somebody still owns that home. So even though the renter isn't having to pay them out of pocket up front and on a dime, if an owner is having to replace an AC system, a roof, make cosmetic improvements, do all these other things, that cost does get passed off to the tenant in one way or another. The increase in taxes, the increase in insurance, that's what we're looking at on our renewals. I don't know about you guys, but most of these owners just want to be made whole. They're not trying to make a mint on the renewal process, because as we've talked about, it's much more expensive to turn that property owner or property over instead of keeping that tenant in place.
Yeah.
So do you think there's a better way? Do you think we're having those conversations upon renewals and everything else with those tenants versus just sending out renewal notices? Do you think we can do a better job in the industry as a whole of having these conversations at different points to maybe get that buy-in from tenants ongoing? Amy?
Well, I would say that for us, we try to explain to the tenants, hey, the property tax has gone up, insurance has gone up. In a lot of areas, we see HOAs are now adding rental fees. So there are additional charges to maintain a rental in a homeowners association. So we try to tell the tenants, hey, the fees are going up. So maybe there's a small bump in the rent, but you're right. We try to encourage, especially when we've got tenants that are paying on time and taking care of the property.
Sure.
That vacancy is super expensive. Turnover is expensive. So we try to avoid that and keep them in there and renew them if we can. So how about you, Danny?
Yeah. And not only HOAs, some of these fees for the cities are getting ridiculous.
Yep.
I don't want to call any of the suburbs out right now, but some of these are getting up into the multiple hundreds of dollars per year simply for the honor of being a landlord.
Yes.
Right?
Yep.
Do you think the landlord is just going to absorb that cost? No, it's all indirectly impacting rents, and I think that's some of the frustration from a tenant perspective is they just think, oh, these landlords are greedy. And two, I don't remember which one of you said it. A lot of them are just trying to be made whole. And, the cost of doing business has just simply gone up,
Absolutely.
And so, from a renewal perspective, I've tried to educate our clients that, the market has flattened out. I mean, we hit the peak. I mean, rents are coming back down, and it's really hard to have that discussion with the property owner right now, because you guys know this, the property taxes are in arrears, essentially. The valuations are, right? So we hit these sky high valuations, which resulted in a sky high tax bill. But now we got rents coming down, but they just paid the sky high tax bill.
Right.
So they're like, I don't want to go down in rent. I just paid X $1,000. Are you crazy? But that's where the market is. So it's a tough situation.
Let's segue into that. Let's talk about some market trends that we're looking at. And while we have an exponential amount of people that are renting, we also have an increase in product because people don't want to let go of their properties. And then we also have people that decided, hey, this is a great opportunity to increase inventory. And so we've got builders that are doing build to rent product and multifamily product that's very attractive to investors. So let's talk about some market trends. Danny, you've already talked about flattening rents. Amy, you do a lot in Collin County. We saw, we're the epicenter of growth, in the nation.
Yeah.
Whether people want to talk about it or not, but I think we're even seeing, obviously, a little bit, whether it's flattening or even dipping a little bit. What's that looked like from your perspective?
So for us on the renewal rates, traditionally we've seen 2 to 3% on our renewal rates per year. So some areas we've been able to maintain that, but some areas, when we look at the inventory that's out there, especially in some of the suburbs, the newer communities that are allowing the investors to come in and purchase and purchase as many properties as they'd like, there's so much inventory out there that if we were to put that property put it back on the market, we'd have to be so aggressive. They would be losing hundreds of dollars a month.
Yep. So that brings it, Danny, we actually were sitting there and talking about one specifically. Princeton is a prime example of communities that are allowing investors or homeowners to turn over their property and don't have a percentage cap or anything else. I think Danny and I were looking at one given time. I had an investor that was looking at purchasing a property in a specific neighborhood. And I think there were something like, in upwards of 200 in the city alone in that price point. And there were something like 50 just in the community that were identical floor plans, nothing that was going to sit there and differentiate from the next person. And that's kind of scary that we're sitting there and looking at that. So Danny, are you seeing that too, where you're these opportunities where the builders are opening, properties back up to investors? Because they really tightened on that over the last few years. But since the affordability crisis is continuing to happen, how is that impacting you? Or are you seeing the same thing that Amy's talking about in regards to really that increase in saturation?
Yeah. So there's I've got 2 points on that. One, the builders opening back up to investors is huge. And the fact that they're not even restricting in some of these communities now. A lot of times they'll only sell a certain number. We've gone into developments now where they've opened the whole development up.
Yep.
And the whole development is bought. And then you have an owner sitting on a product that's brand new, beautiful, and shiny, but it's the exact same one that the other 19 on the street are. And all of them are for rent at the same time.
Yes.
And they expect yours to be rented first.
Yes.
Right. So, that is a huge challenge, and it's going to be a huge challenge, I think, short term. And I think there's going to be some long-term ramifications, to that strategy. And it might impact, some of these cities as well. But that's also part of the reason, we're talking about inventory earlier. And, I pulled a few just brief numbers here. Typically the primetime months for leasing, as we all will agree, is, those middle, late spring, midsummer, right? So I'm talking basically single family here. We had approximately 4,000 listings in our prime time for rent. That was May, June timeframe. We got up to, at the end of November, we were up to almost 6,000 units.
Wow.
6,000. If you think about it, it followed the trajectory of interest rates going up also, right?
Yeah.
So it's all those people that said, no, I'm not going to sell, I'm going to rent. So we had a lot of frustrated owners like, why is my property still on the market?
Mm-hmm.
Well, inventory skyrocketed. Now in that same time frame, we ended December with 5,400 listings. In December for lease, we only signed 2,400 leases. We ended January with 5,165. We only signed 2,600 leases, right? So there is still a tremendous amount of inventory out there. And so that's another, variable in this discussion, going back to what we talked about earlier, the pros and cons of leasing. Am I actually going to lease it or not? So it's a wild and wacky world we're in right now.
I love that. And I'm gonna highlight something right here because we got our new CEO chiming in, Justin Landon. saying great discussion. Thank you, Amy and Danny. So appreciate your expertise. And of course, he's giving me props. I appreciate it. But he's watching over Parker's shoulder, who Parker is our phenomenal producer behind the scenes that's doing that. And so we appreciate both of you working hard late into the evening. And thank you for watching tonight. But yeah, these conversations are huge. Danny, those stats are mind-boggling, because I know right now we're having those same conversations in really hot markets that are saturated, but not nearly as saturated as some of these other suburbs. And ultimately they're going, hey, 18 months ago, we didn't have this problem. Why are we having this problem now? And I think the other thing that we're seeing, not just increase in inventory, but the cyclical demand. We haven't seen those cycles come through as much. I think at any point, I mean, you could, to Danny's point, you could put a property probably on Christmas Eve and you'd have people come and look at it, right? But now I think we are seeing people kind of follow that seasonal cyclical demand that we could kind of chart before. And I don't know about you guys, but January and February seemed a little bit more slow than we've seen over the past 2 or 3 years. I don't know. What say you? Do you think that's just because there's more choices? Do you think that's because people are getting incentivized to stay in their leases and so they're not moving on? Or is it just an inventory play?
Well, I also think here's something we haven't even talked about is the prospect pool, of renters. We've spent so much time talking about all these people sitting on the sidelines and people that just want to rent, but we've also not really taken into account another little variable here. With rent skyrocketing, for those people that used to be able to afford to live by themselves may not be able to afford it anymore. So you're seeing a lot of consolidation, where you might have, a single guy at a 2-bedroom property. Well, he may have a roommate now. Okay. So we just consolidated 2 rental families into one, right?
Smart.
You're seeing multiple generations move in together, and it's all because of affordability and the lack thereof. So, I think there's a lot of factors at play. We just talked about the skyrocketing inventory. We need to talk a little bit more about our prospect pool, right? And it's just not as big as you think it should be.
Yeah.
Amy, what do you say about that?
Same thing. Yeah. I mean, do you remember a summer or 2 ago where we had highest and best offers coming in?
Yeah.
On we had
I love
20
that.
applications on a rental property. And now we're out there, begging people to come look at the rental property. But I think you're right. We are seeing tons and tons of multi-generational people moving in together and, coming in with three generations going into one house. So these big, huge houses that we have in the suburbs, we are filling them up. And in the past, sometimes we would have just a single individual living in a 4,000 square foot house. And now we've got 6 people moving into a 4,000 square foot house. So we definitely see a lot of that. We have done some incentivizing on some of our property that if it does sit, trying to make ours stand out. We have to make sure that all of our inventory is looking good and smelling good because we want them to pick us when they go to take a look at that property. But doing some move-in specials, we've gone back to doing some of that on some of our inventory as well, just to get this stuff leased. So definitely the increase in competition is being felt all the way around.
Let's talk about that. Is that okay, Ashley? I'm sorry.
Yeah, let's do it.
Yeah, so let's talk about that because Amy just mentioned the I word, incentives. We haven't done that since the Great Recession,
Yep.
I mean, it used to, back then, if you could fog a mirror, we'd take you, right? And give you a flat screen TV. But I mean, I'd be curious to know, Amy, what type of incentives are you doing or what are you seeing in your neck of the woods?
Yeah, we've seen a reduction in rent, whether it's 2 weeks free on a 12-month lease or even a full month free on a full 12-month lease. We've seen no application fees on some properties that try to encourage getting more applications coming in. So anything that we can do to try to put our property at the top of the stack, we want to keep that vacancy as low as possible for all of our clients. So yeah, we've tried. We've had to get a little creative. So I spend a lot of time looking at what are we competing against. What's the total amount? Like Danny said, how many are out there on the market? How many have been rented? What is that absorption rate looking like? I don't want to have to go to an owner and say, hey, it looks like it's going to take us 3, 4, 5, 6 months to rent this house. I think they would string me up on the flagpole. So trying to make sure we're pricing them right as well. If we can't get them leased in the first 14 to 15 days, we're doing some pretty significant price reductions to stay competitive.
Don't worry, Amy. If you get strung up on a flagpole, I'll pull you back down. Okay, Danny, what were you going to say?
No, I was going to say the same thing. I mean, offering some sort of incentive, be it some sort of, rent concessions, appliances, Amazon cards, whatever it is. People may not want to do that, but it's actually going to make you more money over the long term. By getting that property, you stop the bleeding quicker, and then you can help differentiate yourself and you rise above all of that inventory out there, which is the problem, especially what we talked about in these new build communities as well. I'll even add one on to that, Amy. There's fee in lieu of security deposit solutions out there now that allow tenants to get into properties with less upfront money. And, just to break it down to the bare basics, it's essentially kind of like an insurance policy where a tenant will pay a monthly fee instead of having to fork up $2,000, $3,000, $4,000, $5,000, $6,000 extra dollars, which they may not have while they're waiting for their deposit from their last place to come in. So, that's another incentive, to help get them in the door as well. So, I mean, people need to be really creative these days to make sure that they're getting these properties leased as quickly as they can by considering some of these options.
Well, and something else that I will tell you that we've heard on a consistent level is there are also tenants that want to have a really cohesive experience. And that's the other thing too. They want to know that there's a communication channel, that they are going to be heard, that they are going to feel like, that they are going to have a really good experience living in that property, because we do have a lot of bad actors, and that's in any industry, right? But I think communication is also key. If you can over communicate right now and let somebody know that you are going to proactively provide a wonderful living experience for them, that's also an incentive. And we've heard that time and time again, where we've had 20 other properties that somebody can sit there and do. You answered the phone. We appreciate you being courteous. You weren't disruptive. You didn't shut us down. You asked us questions. And I think that's something else that just industry wide, I think we can be better communicators, right?
Yes.
Always.
Yeah, absolutely.
Always.
I think that goes back to some of the agents doing just leasing. Like, who's going to be the property manager of that property? Is the owner going to handle it? Who are these people going to call when the toilet breaks at 2 a.m.? Is there going to be a local contact? Are they going to have to call somebody that lives out of state to be able to try to fix their issues? So absolutely, customer service still reigns in this business.
And we have so much technology that, I think we've kind of got away from, the old face-to-face. Heck, we're not face-to-face right now. Nobody is on this call, right? But, there has to be a balance there, leverage technology, but don't lose sight of the personal aspect. And, what you said, Ashley, you answered the phone, right? That goes a long way, right?
And that's so sad that's where we are. That's the barrier of entry. Oh my gosh, thank you. There's a human being. But how many times, even we do it. When you call somewhere and you want to just talk to a human being and you're sitting there and yelling, operator, customer service, 0, 0. Like, I just need to talk to a human so I can explain what my situation is, because a prompt is not going to get me there. And I think if we can sit there, technology is huge. To your point, Danny, technology, artificial intelligence, none of us will demonize that. But that is only going to replace the administrative side, the stuff that is not the human-to-human interaction. That should free up more time for us to be able to have more of that, even if it's virtual, face-to-face, or on the phone or anything else, creating that human connection. And so I think that's really huge. We have 5 minutes left.
Oh my gosh, already?
I know. It goes so fast. I want to point out something that Alicia said when we were talking about inventory. So the last few minutes, let's talk about the short-term rentals, because that's been a big topic. Amy, I know you've kind of spearheaded a lot of that conversation in Plano, but Airbnbs or any type of short-term rentals turning into long-term. Do you also think that's something that we're seeing that is contributing to the increase in inventory on rental product, or do you think that that's more of an impact on the resale side?
Well, I would say for the short-term rentals, there's been so much publicity about short-term rentals coming and going and actually being banned in certain areas, the regulations coming down the pike about short-term rentals. So I think over this last year, and I'd be interested to hear what Danny says too, but over this last year was the first time that we were actually getting calls from owners that said, I have a short-term rental, but I heard that they're going to be banning them. So I want to get my property out of the short-term rental pool as quickly as possible and lock in a long-term tenant before some type of regulation happens.
Yeah.
So, numerous lawsuits, Fort Worth, Grapevine, Austin, Dallas, who knows what's going to happen in Plano. Plano's got their short-term rental ban right now that expires in May. But yeah, it's a huge thing that's on people's mind, especially if they've had short-term rentals for a long period of time and they come along and all of a sudden, whoops, can't do short-term rentals anymore.
Yeah.
Turning those properties into long-term rentals. So I don't know. What are you seeing, Danny?
Yeah, I mean, I agree with that. I think there's a lot of short-term rental owners that they just don't want to deal with the uncertainty of it all anymore. Right. And so, some of them are just strategically pivoting over to long-term rentals. I think a lot of those investors, though, shouldn't be long-term rental owners. I think their mindsets are different as well. But, I've turned down my fair share of them because they all seem to come to me and say, hey, I have this short-term, so I want you to lease it long-term furnished. And I was like, I don't manage furnished property.
Yeah.
You shouldn't either. It's a whole nother ball game.
Yeah.
So, I hope all the short-term rentals will turn into sales for people like you, Ashley. Because, I don't think that, many of those type of owners are suited for long-term.
Expectations, right? I mean, cash flow and everything else is very different on a long-term versus a short-term rental.
It won't pencil out. Like ROI won't be there like they were expecting when they purchased it as a short-term.
Correct. Yeah, no, absolutely. So we've had a couple of things, or a couple of people, not things. Sorry about that. I think that was Gerald who was specifically asking about maybe some certifications and some other things. And so, Danny and Amy, can you chime in a little bit maybe on what certifications are out there or programs, education programs for people that do want to educate themselves and get involved and get, to that pathway of being proficient in leasing and property management? So Danny, I'll let you go first. I know you teach a couple of courses.
Yeah, I teach just a few, but you told me not to look at the chat, so I haven't been keeping.
That's okay.
Right. Last time I did that, I lost my train of thought.
Yes.
Okay, so I think it was Gerald. Gerald was asking about. Yeah. So Gerald, what you were asking about is the TRPM classes, the Texas Residential Property Manager designation courses that are offered through Texas Realtors. I think your confusion is, and I haven't even told Amy this, we actually unfortunately pulled those from the calendar this month. We're attempting to get them rescheduled in the fourth quarter for various reasons that we don't have time to go into right now. We did just do a round of the TRLS courses, which I think would be very valuable for even those of you not wanting to do property management. That's the Texas Realtor Leasing Specialist courses. There's 2 of those. We just taught those 2 or 3 weeks ago at MetroTex.
Yes, you did.
Amy teaches those as well. And they're also on the calendar for MetroTex in September. There is a session coming up at MetroTex on if you want to get into property management. It's called So Do You Want to Be a Property Manager? And it's a CE course that will just kind of go over the high level aspects of what the heck we do all day, every day, how to build your business and what you're looking to get into. So that's still on the calendar in March, but the TRPM courses, unfortunately, are going to be moved later in the calendar year.
All right. So Amy, because we got Alicia, who is always awesome in the chat on this kind of stuff, saying NARPM. So would you like to give some plugs for NARPM and what y'all do?
Of course. Absolutely. Well, and also at the local level. So for MetroTex, we do have the Leasing and Property Management Committee meeting. It's actually tomorrow. So we will be there tomorrow at 10 a.m. to hash out things at MetroTex at their headquarters. The Texas Realtors also has a leasing and property management committee meeting that they meet twice a year. They also put out webinars and other information about leasing and property management, including we may be getting some new forms this year. We're very excited about those coming down the pike. And, Danny's been instrumental in getting those updated for us. But yes, for those people that have been doing property management for a bit and are ready to take it to the next level, NARPM would be a great place for them to do that. And that would be the National Association of Residential Property Managers. We have a Dallas and a Fort Worth local chapter. We have a Texas state chapter. And of course, we have our national chapter. We do lots and lots of education and sharing and making sure that we're all staying on top of all of these things that change in our industry constantly. So yeah, definitely would love to tell you more about NARPM if you're interested in learning more about that. But lots of education that's out there where we are pushing to get more education, both at Texas Realtors and through the local associations, to spread the word about property management. The So You Want to Be a Property Manager class is a great class to just kind of get the basics about it.
Yep.
And then hopefully we can get the TRPM and the TRLS classes back on the schedule as appropriate. But trying to get some risk management classes out there as well so that people can learn about the risks that are out there and making sure that these brokers are paying attention to what these agents are doing. That's really the key at the heart of it. Broker responsibility. Got to make sure these agents are competent. So
we love that, right, Danny?
Music to my ears.
No, it's fantastic. And that's why I thank both of you for jumping on this evening and giving your valuable time. To have these really high level and holistic conversations about the leasing and property management space. And thank you for continuing to pour into our realtor communities, both associations at the local level. I know Amy and Danny, you guys are teaching all over the place, and then state and nationally as well. And your contribution does not go unnoticed. And when people wonder what we do and what the associations provide, guys, it's this. Without our local and state and national associations, both at the NARPM side and the National Association of Realtors side, we can't do this kind of stuff. We don't have the infrastructure to continue to provide this type of education and advocacy. So if you don't like rent control, if you want to get educated and you want to make sure that you can continue to put food on the table, take some of these courses, reach out to Danny, Amy, or myself. Thank you, Reese. Learn more, get immersed, and be educated, because you too can be an asset to your clients, whether you're in the leasing and property management space or just a great referral partner to the rest of us that are sitting here and proficient and educated in it. But guys, thank you so much. Thank you for being here this evening. And we're going to have you on here again, especially when those new forms come down the pipe. What do you think?
Yes.
Hey, let's do it. I can talk contracts all day. That's fun.
Okay, that'll be the next one. All right, guys. Well, enjoy the rest of your evening. Thank you, everyone, for joining us, and we'll talk to you very soon.
All right. Thanks.